as expected, the RBA has indeed kept the cash rate unchanged, so on hold at 2.5% at this meeting today for the month of May. The RBA says it sees a period of stability for rates. I mean, that really is a line that we've been hearing for quite some time. That's what all the economists had expected. Now, whether or not the budget has at all played into the hands of the RBA in terms of keeping it on hold, we won't know. Who knows? They might mention something in the statement. We'll have to wait and see.
If we're very lucky. We'll wait till we get through the finer detail, but we can already see that, as James has said, a period of stability for rates is where the RBA sees the bigger picture. The Australian dollar remains high historically, so that will be honed in on by the traders. And public spending set to be subdued. We were lucky then.
Now, of course, this very much echoes a lot of the commentary that we've been hearing, a lot of the rhetoric out of the government about what is going to be a tough budget. Of course, we get it next Tuesday. So the fact that maybe, I suppose, echoing what we're hearing from the government in regards to public spending set to be subdued. An interesting line coming from the RBA. We've just been delivered the statement here. Literally.
Like the old days.
Yeah, absolutely. Love a bit of live TV. Now, not sure whether or not CommSec's chief economist Craig James had a chance to look at the statement itself, but we might bring him in. Craig, on hold as expected. Public spending set to be subdued. Interest rate stability for some time. And of course, as we've seen in the last few statements, Aussie dollar historically high.
Yes, James, the one thing that stands out from the statement today is that there hasn't been much change in the wording. If you go through by line, sentence by sentence, paragraph by paragraph, you're probably going to see little change in the overall wording. So the Reserve Bank is very serious about that term stability. It wants interest rates to remain where they are for quite a long period of time to be able to enable the conflicting forces in the economy to be able to work themselves out. The fact that mining, construction is easing, the fact that housing is picking up, that we have a contraction in terms of the public sector activity, but we have an improvement in terms of the private sector and greater consumer spending. So there's a range of conflicting forces that have got to work themselves out. The safest place for the Reserve Bank is on the interest rate sidelines, and it's emphasising that by really making no change to the wording of the statement.
So can we be clear that the line public spending is scheduled to be subdued? So this is in the fourth paragraph, the last line.
Yep.
Is that consistent with what we've heard from the Reserve Bank, or is this some kind of comment that we can read into on the upcoming budget?
No, that sentence was in the last paragraph, statement. Public spending is scheduled to be subdued. Yeah, it's exactly word for word. So, this is something that the Reserve Bank assumes, that state, territory and federal governments will be winding back in terms of the stimulus in the economy. The extent to which they wind back remains to be seen. That's why the Reserve Bank will be watching very closely the Victorian budget, so the Western Australian budget, later in the week, and also the federal government's budget next week, and looking for just how much contraction's taken out, and also the impact in terms of consumer confidence. We do know from the Roy Morgan ANZ consumer confidence poll that was out today, we've had something like a 9% fall in consumer confidence just in the last two weeks. Consumer confidence is at the lowest levels in 5 years. If this continues, then the Reserve Bank may reinstitute its easing bias, looking for rate cuts down the track rather than rate hikes. Now, that could be a little bit of a maverick, view. Most people believe the next move is going to be a rate hike, but we've got to see this budget and just see how contraction it really is.
So we could realistically be looking at a potential sub 2.5% cash rate, which is already at record lows.
Well, certainly we know that the Reserve Bank has a neutral stance. It can move each way in terms of interest rates. It could cut rates or it could hike rates from here. If the budget is significantly contractionary and has a significant depressing influence on consumer spending, then the Reserve Bank may reinstitute its easing bias, and certainly that would put downward pressure on the currency and provide some support for the domestic economy, particularly for businesses. Now, certainly that's not our central view. Our central view is that we'll be able to get through this budget period, and then much later in the year the Reserve Bank will be looking to increase rates. But in the short term, this is the major uncertainty, just how contractionary this federal budget really is.